Hey everybody, thanks for joining us today. We just want to do a quick little video to introduce ourselves, say hi to you guys, and give you guys a little bit of our background, both professionally and our investing background, and what it is we're up to. I'm Brian. This is Gina, and I'm a professional airline pilot. Been flying professionally for about 20 years commercially, and about 28 total. My investing background goes all the way back to about 2003, so just a little over 20 years of investing in real estate. Started with my first rental with my cousin. We went in on a property out in Portland, Oregon, just bought a townhome out there, did a rent by the room, and that went really well for us. So I got bit by the bug there and been basically going ever since. 2005, I moved out to Denver, jumped right in with a triplex multi-unit property there and did the house hack. Fixed up the units, lived in it while I was renting it out, then went from there to a single family home. And then fast forward, I met Gina here, we got married and we bought our first house together. And we kind of sat down and decided that we were going to keep doing the rental thing. So we quickly turned that first house into our first rental together. And we moved out here to Golden where we are now. Once we got out here, we decided we wanted to try flipping houses. So we did that and we flipped a house successfully. It was worked out great for us, but it was really labor intensive.
Very.
Yeah, lots of trips to Home Depot, and we have two kids, two girls, and at the time they were what, 6 months?
Babies.
Yeah, they were babies. Our youngest was 6 months, and then like a 2-year-old, 2.5-year-old. So we realized real quickly that that was not going to be sustainable for us with our time constraints and everything else. So we went right back to buying multi-units and doing what's called the BRRRR method. We bought our first fourplex, bought that as a distressed property. We rehabbed it, we rented it back out, and then we did a cash out refi. So that's the BRRRR method. We started doing that with rental properties successfully. Worked really well for us. We did 2 more duplexes and then a short-term rental up in the mountains. But, wasn't long before interest rates started rising really rapidly, and that wasn't working anymore. So right now we're sitting at a $4 million portfolio and owning and operating that, and that's doing well for us, but we've hit the wall. Now the numbers don't really pencil out anymore for us. So until rates change, we started looking into other investments, and that's what led us down the road we're on today, which is private equity investments. Started doing all the research on that and really decided that that was the way to go, and we pivoted. I'm going to hand it off to Gina here. You want to jump in here and explain those?
For sure. So let me just back up a little bit and give you my background. I have a finance degree from Texas A&M, and my first career was spent in commercial lending. I was in various roles. I was a field auditor straight out of college, going out to individual companies and doing collateral audits, checking the books, making sure everything ticked and tied. And then I was moved up into an account and manager role where I was managing a portfolio of outstanding loan clients and just kind of keeping track of them on a monthly basis. And this is after the loan's been originated. Did that for a few years, and then I ended up segueing into the underwriting position, which is where most of the new deal origination is created. And I was working on loans anywhere from $2 million all the way up to $100 million for this company. And it was, pretty intense analysis, obviously, as you get into the higher dollars. But I felt very comfortable analyzing collateral, mitigating risk, working through all the what if scenarios, and just the basic ins and outs of lending. About 12, 13 years ago, when Brian and I were getting serious, he was a commuting airline pilot, and we needed to kind of do a lifestyle adjustment. I ended up moving over into residential real estate sales. And what started out as kind of a initial thought process of a side gig took off very quickly, and I became a top performer at my company starting in my second year. And I've maintained that position up until as recently as last year. I finished number 3 out of a brokerage of 700 agents as far as production goes. So we've stayed really busy, as you can imagine. But I do love that my backgrounds blend nicely to look into these types of investments. I have the lending background, I have the real estate background. So as Brian mentioned, as the market has changed and shifted, we needed to pivot and think about another way to continue growing and investing in the real estate world. We've realized that's kind of our bread and butter. That's where it works the best for us. And I started getting these emails probably in the last two plus years from my colleagues about passive real estate investing. There were syndications, there was value added real estate for multifamily, think big apartments. But honestly, we weren't that excited about those. The yields that were being advertised were a little bit lower, kind of in the low teens, 12 to 15. Definitely not bad yields, but for the risk, it just didn't seem that exciting to us.
Yeah, and those syndications were, they're suffering from the same problem we had with just the rising interest rates. Their exit strategy relied on the rates to be a little better, and it just didn't overall fit.
Yeah, exactly. So I did receive an email this summer, actually earlier this year, from another trusted colleague about Be the Bank. And that caught my attention for obvious reasons. And we started digging into it and really liked the investment. Effectively, it was a hard money lender in the Midwest and that they were providing capital to, and they were getting returns in the high teens, little to no risk well, there's always risk, let's be clear, but compared to the equity investments that we were seeing, or even our own, duplex investments, the risk was spread out over a large portfolio of loans, and we decided to jump right in. And so that's what we did, and we've been loving it. It was a bit of a jaw dropper when we first started getting those checks in, and I realized that my investment with this debt fund was yielding twice the cash flow on a monthly basis than we were receiving on our most recent duplex, which we had twice as much invested in. So that was a bit jaw dropping in a good way.
It was more than double. It was great.
Yeah, we were pretty stoked about that. And I was talking to the management team and the operating team about it, and I was like, gosh, Brian and I know so many people between my past clients, the pilots he flies with that are constantly reaching out to us about, buying a rental property or doing some other type of investment. And honestly, it wasn't a good time for that advice. But I said, I know so many people that would be interested in this debt fund. And they said, we should just go out and do our own fund to fund, like leverage our networks, that there's actually tools out there that will allow us to pull our capital together and take part of these type of investments, because otherwise the barrier to entry as an individual is usually too high for most people, whether it's too much money altogether or it's just too much concentration risk for an individual to jump into a big investment like this. It just doesn't really work. But with pooled capital through a fund to fund program, we all can kind of jump in at a little bit lower entry and still reap the same benefits.
Yeah, I think everybody would like that exposure to real estate. It's just not always that easy with the large chunk of money that's usually required for a down payment. There's the headaches that come along with it and all of those things. So this vehicle actually gives everybody that chance to be exposed to real estate and get those kind of returns, and diversify without having the headaches.
Yeah, so again, this isn't going to be for the details. Those are coming very soon in another email, another video. But feel free to pick up the phone between now and then if you want to have a conversation just to get high level what we're talking about, or after you've had a chance to do the deal review. We'd happy to chat through it. There's no dumb questions. Trust me, I've already asked all the dumb questions. But we're very excited to share this with you guys.
All right, guys. Thanks for joining in, and stay tuned. We'll be putting out some information here pretty soon. So love to hear from you guys. Thanks.